What is going on, guys? Good morning or good afternoon for those of us who are out on the East Coast. Del Kwame, Got Mortgages. Didn't have a chance to come on last night. We're actually here away at our leadership conference. But I really wanted to touch base with us. Last Friday was a little bit of a market mover. We saw a lot of different changes in regards to the picture that we were expecting with the Fed. We had a feeling that the Federal Reserve was truly on that pace to go ahead and actually give us that confident 50 basis point cut. Now that we're seeing the CME watch, we're actually seeing that it has shifted now almost to like a 95%, where we're no longer going to see a 50% cut, could be a 25% cut. I think this truly kind of showed a lot of the different changes and things along that nature that we really just didn't expect. We knew the employment market was going to come in a little hotter. But these are some of the things. Again, it's just so volatile. We're gonna go over all this stuff. Unfortunately, I cannot share my screen, but I will certainly try to explain this as thoroughly as possible. And as you guys always know, if you guys go to our website, gotmortgages.com/blogs, you guys will actually get the exact same recording and understanding that we're going to go through. Okay, so we're going to take a look and we're going to go over all this stuff hyper thoroughly in detail. Really making sure that we have a clear understanding of the employment market, and just kind of showing not only did we get the BLS report on Friday that was a market mover, but we also saw a little bit of revisions to some of the earlier reports that kind of cause right now mortgage-backed securities and treasury yields to truly change. Right now, we're going to look at that big upside again for the surprise. We're going to go over all these stuff and really kind of take advantage of what the big upside surprises end up being and take it from there. Okay. So the bottom line, again, when it comes to the BLS report, there were 254,000 jobs that were created, really kind of gaining over 140,000 above what we were expecting. So you're talking about almost 110,000 jobs overestimated exactly what they were looking for. What happened with this? This took the employment market to actually go from 4.2% to 4.1%. And remember, we want the unemployment rate to actually go up in an effort to make sure that we start seeing a lot of the different changes that are going to occur when it comes to the employment market. So again, the bottom line, when we looked at that stuff, not only did we also see a significant uptick this past month, we also saw a reduction, or I should say an increase. They added actually more jobs from the prior month, which again kind of filtered into with these revisions, showing that the data, again, is really supportive in regards to those changes, right? Now, we have the private sector. So private sector, again, we also saw jumps in regards to the ADP report, and that also showed a little bit of a jump after a 5-month slowdown, right? Which kind of also caused a little bit of transitions when we saw almost 143,000 jobs were also simultaneously newly created, which threw a little bit of a wrench in regards to where the employment market is weakening, right? All right, so again, so the bottom line, when we look at that, not only was there that, there was also some deceleration when it comes to people staying at their jobs, right? We also saw a little bit of changes when we talked about the people that were changing jobs when it comes to job employments and stuff, and then just truly stronger hiring. Stronger hiring just, again, didn't require a little bit of strength and a little bit of growth, which also showed those little changes. Now, when we look at the JOLTS report, job opening and labor turnovers, that came out on Tuesday. That, again, also saw a little bit of an uptick from 7.7 million in July to about 8 million in August. Hiring rate did drop. It is at the lowest level in COVID. So that's kind of something that we're going to be also making sure we keep an eye on. The quit rate, less people are truly actually going out and poaching people at the same time. So we'll get some updates this week when we talk about the inflation report and just consumer price index. That'll come to us on Thursday. We'll also really try to see, has inflation slowed down? We know we avoided a huge hurdle and a wrench when we looked at the market when it came to the longshoremen. That would have truly threw a lot of different really issues and hurdles in regards to that. So we avoided that. We'll get also the producer price index once again. That will come out truly the following day on Friday, and then the typical jobless claims. So, job market, again, we have a little bit of room to kind of break over that 10-year treasury. So hopefully we'll see a little bit of positive movement from the inflation report, and that can at least give us a little bit of insight in regards to where we need to pivot and then take it from there. I appreciate you guys jumping on. Again, we will be sharing this later and on our website, gotmortgages.com/blogs. Make sure you guys check it out, and I'll talk to you guys soon.